The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the July 28th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a fabulous weekend. I know I did. Let's both of us. Let's make sure that we do all that we can do to have a magnificent Monday. And welcome to all our new listeners here. You know, check-in time at the Hotel California. That's TFNN. Check-in time here is now 8 a.m. That means we've got 10 hours of live programming each day. Our man John Logan kicks us off with the Global Market Pulse. Great show. Good show this morning, John. And, of course, here at TFNN, we've got an interactive forum. That means you can give us a call, 877-927-6648. Happy to take your call. We'd love to take your call, take a look at your stock chart, assist you however we can. And my outcome here during the next couple hours, well, it's to teach you how to master the tools for trading. That includes technical patterns like the A to B equals CD, the lightning bolt pattern out there. We'll take a look at Fibonacci retracement and expansions because we utilize those tools because they help us to identify Gartley and butterfly patterns that are out there. So we'll look at those. And, of course, we always want to take a look at the candlestick reversal signals out there, bullish and bearish, because the market's always talking to us. The bulls and the bears, they're the sign makers of the market. They go to work each and every day, whatever time frame it is that you trade on, and they leave us clues out there. It is Magnificent Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's get right to it right now. Relatively flat market out here. Dow futures are up 8 points. They're trading out at 16,899. S&P futures up 2 points. Trade at 1973. NASDAQ up 7 at 3962. Russell 2000 up 3 points. Trade at 1144. King Dollar down 4 pennies. Trading out at 81.05. Silver and gold are both flat right now. Light sweet crude off 88 cents, down about 0.9%. It's trading out at 101.22. A quick peek across the globe out here. We'll see that the DAX is down 18 points. FTSE is up 5. Over in Asia last night, we had the Nikkei finish up 71 points. Hang Seng up 212, up about 0.9%. The Shanghai was up 53 points, up 2.5% out here. Let's start with the, since it's flat in our markets, let's go start with the world market, see what we have going on out here. We'll go ahead and put up my Ensign Windows charts here to take a look at the world markets. Let's start off by taking a look at the FTSE. We last looked at this chart, I believe, on Thursday. One of the things that you'll notice inside of the FTSE, it's got this 430-point consolidation pattern. That says if it breaks to the upside or to the downside, you can expect about a 430-point move. Now, what's interesting here about the FTSE, as it was making its low again back here on July 9th, what you'll see, I'll explode this up just a little bit on my chart out here, was making a really nice 3 drive to a bottom pattern out here. That's on the trading session of July the 10th. If we take a look at what it's done thus far, if we just simply come from its swing point high on the trading session of July 3rd down to the low out here that was put in on July 10th, we'll see that it's traded to the 0.786 retracement level. Now, Friday's candle out there, little bearish engulfing candle, says it should have some resistance at Friday's high at 68.30. If it takes out that area, it'll go up and at least test the top of its consolidation box. And what we want to watch for is not necessarily just the test of the consolidation box, which is at about the 68.65 level. You'd want to see the FTSE be able to crack this little key reversal session. That was on the trading session here of May the 5th. That high is at 68. 95. That's the level that it needs to crack out here. But, let's put in a fairly nice bottoming pattern out here. We want to watch that because, these markets here, they're going to work to a certain extent in one world order. If we take a look at the DAX right now, the DAX is trading off at trade down at 96.26 out here. It's been in a clear little slight downtrend out here. If we take a look, though, from its low, that would come back all the way here to the trading session of March the 14th to this little inverted it's not inverted, it's a shooting star candle out here, an inverted hammer from June the 20th. What we'll notice is that the retracement thus far inside the DAX, only a 0.382 retracement. If this area holds here, that's nothing. That actually, if the DAX were to move higher, that could set up a very strong A to B equals CD to the upside. So far, the damage in the DAX pretty well contained out there. If we take a look at the Nikkei, you'll see inside the Nikkei here, you'll see a little bit of a yellow consolidation box. Now, it's not consolidating at its highs. It's just been trading inside this range out here. But what it did this morning is it broke out of that level. It broke out of that level. Of course, it's going to have some resistance at this gap down if it can close that. That is the low of January 23rd. That price point is 15,690. Price will likely just simply travel up to the top of its rising price channel out here. Probably test the high of that January 23rd level at the 15,958 range. If we take a look at the Shanghai, now this is a monthly chart out here, and this is kind of interesting. The Shanghai has been very weak. In monthly chart, if you take a look at the 2009 lows inside the Shanghai, you're down at a price level of 1763. It's only trading at 2280 right now. Has not really made much of a move. But on a monthly basis, what you'll notice here, last month it just pierced through, not with any kind of conviction, the month of June, pierced through a little descending price channel. It now is clearly broken above that. If you take a look at the Shanghai and you go from the swing point of August of 2009, go from that high, 3651, down to the low that was put in here, on June 30th, or June, I should say. That low is 1935. You'll see that it's very likely that what we will see is a move up to at least a dead cat bounce. That would be 2590. We had the Shanghai close out this morning or last night, I should say, early this morning for us, our time, 2280, 54 out there. Excuse me. Sorry about that. Let's take a look at the last one. Let's take a look at the Hang Seng out here. Hang Seng now clearly closing above any kind of resistance here as of late, meaning the highs has taken out the February 4th high. It has taken out the high here from December of 2013. It looks to be setting up an A to B equals CD pattern. If we take a look at that, we'll start all the way down here, June 26, 2013. That's at 19,913.98. That's your A point. Your B point is going to be the high from December 3rd. Your C point is going to be the low down here on March the 20th. Looks like the Hang Seng on its way up to complete a 1-to-1 A to B equals CD in the 25,922 level out here. Let me put this on a weekly chart for us. Let's see what how about this? This is certainly breaking out above the February 2013 level. Did that last month. And we'll see. We'll see the same A to B equals CD pattern here on the. I believe we will on the weekly chart as well, or we should. That says the 25,816 level. 25,816 inside the Hang Seng would actually take out its November 2010 high. That is the high out here. Its most recent high, I should say, going back on the left-hand side of the chart. So this looks, pretty bullish. Took out last week. Really very strong inside of the Hang Seng. A nice wide-ranging bar as was taking out a resistance level. So that's what's going on in the overseas markets. Let's go take a look at our markets here. Right now, obviously, we experienced inside our market a fairly decent pullback on Friday. We had the Dow and the Russell 2000 off about 1%. Let's go take a look at the futures market. Let's look at an intraday chart out here right now. Let's take a look at, here's 4 different time frames for the ES Mini. It has the TAS market profiles on there. Those are the red and light blue and green horizontal lines going across my screen out here. But let's take a look at a 120-minute time frame chart out here. What we'll notice on this chart with the ES Mini, the ES Mini trading out right now, 1972.75. If we take a look at a little trend, it's trying to break through this downtrend out here. We'll see if it can do that. And if you just simply come to the high out here, the session from July 24th at 10 a.m., I'm going to try to use that as my touch point. There we go. And should we use that? Nah. Well, that's one. Yeah, that would be there. There's really where your trend would be. Your trend line would be inside of the ES Mini, and that's up here at about the 1976 level. If it can clear 1974, the 1976 in essence will be its next test. That is on the 120-minute time frame out here. If let's take a look. Is there any kind of A to B equals CD to the downside out here inside of the ES Mini? I suppose there is. We take a look at the A point out here, and we'll go ahead and use it. It looks like the highs are about the same out here. Let me see here. July 24th at the 6 a.m., that would be 8 a.m. session, the close. That was 1985.75. We had 1985.75 on the session that ended at 12 noon. I'll just go ahead and use that as my A point out here. There's your A point. Your B point would be down here at about 2,000 hours on July 24th. Not much of a retracement up here, taking us into the 6 a.m. time frame on July 25th. You can see that what the ES Mini has done is done a 1 to 1.618 A to B equals CD to the downside. That gave us that price projection here of 1967 at the low on Friday. What we saw here was this, this was last night, I should say. The low last night, it got down to a level of 1966.50. So it's completed a 1 to 1.618, A to B equals CD to the downside, running into some resistance of its market profile at that 1973. Nice bullish engulfing session here as we speak, but this does not end for another 45 minutes. So we'll see if the bulls are going to release the hounds out here inside of the ES Mini on its 120-minute time frame chart. If we look at the daily chart out here, still in neutral to bullish configuration. Won't get into that bearish configuration until it breaks through that 1961.45 level. But let's do this here while we have a minute before we go to break. Let's take a look at last week itself. Let's take a look at here's the daily chart. These are the Rhodes Momentum trading indicators on here. But let's go ahead and put this on a weekly chart because we had the weekend. And what I want you to take a look at here is the NASDAQ. And when you take a look at the NASDAQ out here, no question that we saw some pressure inside the Dow. We saw some pressure inside the Russell 2000. Its chart is not going to look as pretty and or as bullish as this chart is here. But you'll see on a weekly basis here, no price relative strength divergent pattern. That means that price has been able to go to higher highs on more relative strength on the weekly basis. If we take a look at the candle configuration from last week, there is absolutely nothing bearish about this candle configuration on a weekly chart. Now, likewise, if we go take a look at the S&P futures, we can take a look at the indexes as well. But let's just take a look at the S&P futures. I'm putting it on the continuous contract, so I've got plenty of data. It too last week, the candle that it formed out there looks like a doji, smells like a doji, but really it's called a high wave candle out there. Does mean that it's lost its way, but that's all that it really means on a weekly basis. No real damage last week inside of the S&P futures on a weekly time frame. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-market out here, we've got the Family Dollar Store and Dollar Tree getting together, both stocks trading to the upside. Trulia, I believe, being bought out by what's that? Well, I just have to probably click on it. It'll tell me who it's being bought out. Trulia is acquisition. Trulia by where is it? Who is it? Why doesn't it say the name? Zillow. There we go, Zillow. Z is the ticker symbol on that. Little buyout out there. El Pollo Loco going public on Friday. That's trading up. It closed at $24. It's trading out right now in the pre-market at $26. XG Technology, XGTI is the ticker symbol. They closed out at $223. It's trading at $265 right now. UNG, the natural gas ETF out there, it closed at $20.83. It's trading out at $21.20 as we speak. Apple closed out at $97.67. It's trading up about 20 cents right now, so nothing big to the upside here. Accelerix Pharmaceuticals, ACRX. Now that's moving big to the downside. It closed at $10.83. Right now, priced out at $7.02. I don't see the news behind it. Let's go take a look at what's down at the $7 level out here. At $7, This will be breaking its market profile low, and it's also going to be breaking a swing point to the downside. And that's a swing point from the trading session of July 17th. That low out there is $8.98. So let's go see if we can find some volume down at $7 out here to see where this thing is trading down into. It's actually going to go ahead. Looks like it's going to go ahead and crack the B point of an A to B equals CD to the downside, which looks like going to be a pretty decent A to B equals CD to the downside. The swing points that I'm looking at here, folks, are back on the trading session from June the 9th. That low is at 813. The low on the prior session was at 813 as well. Both at 813. Volume-wise, we'll use 1 million shares out there. But here's the A to B equals CD to the downside. And if it closes below that 813 level right now in the pre-market trading below that, so no reason to believe that it may not do that. Your A point's going to be the high from March the 6th. Your B point's going to be either that June 9th or the June 8th candle session. Makes a retracement up here on July 7th. It was making a high out there, was pushing highs with some decent volume on that trading session, even pushing into the highs here on Friday. Nonetheless, 1-to-1 A to B equals CD takes you into the $6.14 range. That's ticker symbol ACRX. That's Accelerex Pharmaceuticals. It's going to be accelerating to the downside. It's going to be taking you all the way back to the October 31st, 2013 area between 604 and 681 out there. So that's moving to the downside. You've got Carnival Cruise Lines, which had a nice trading session here on Thursday. Friday looks like it created a little bit of a island reversal out here, trading down also this morning. It closed at 36.68. It's only down about 30 cents out here. Nonetheless, let me try to expand this back out here. Had some pretty nice movement in it on Thursday. Gaps down on Friday. Creates a bit of an island out there. I would just say at this stage, where's the... let me pull this back just a bit out here. Really kind of a consolidation. Carnival Cruise Line should be okay unless it breaks through the low from April 15th. And that low is at 35.79. If it cracks 35.79 with more than 3.3 million shares out there, it'll be giving you an A to B equals CD to the downside. That'll give us a price projection right around the price level. The 1-to-1 will take you to 34.55 out there. But at 34.55, I suspect it would actually move down a bit lower than that. That is on CCL, Carnival Cruise Line out there. Now, we did have a new moon come in over the weekend out here. As we take a look at our lunar chart out here, we'll see all of the most recent full and new moons out here. Now, the question is, as it came in, I came in on... Saturday? Yeah, I came in, I believe, on July 26th. Yeah, I came in on Saturday. So the question is, was Friday's low a low of this lunar, or was Friday really the high out there? Coming in on a Saturday, you don't know if it was the high of the prior session or the low of that session out here. So we'll just have to wait and see. You can see the last few new moons out here. They've actually acted more as bottoms versus reversal signals. The same is the case with the full moon. So you'd almost have to say at this stage here that the new moons aren't really doing a whole lot of good with regard to giving us any kind of real direction inside of the markets. Right now, we've got futures relatively flat. Dow's up 2, S&P's up 1. We'll be right back for the opening bell.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 13 points, trading on to 16,948. S&P off 1 at trading at 1977. NASDAQ Composite up 1 point, trading 44.50. Russell 2000 flat, trading at 1144. NDX 100 up 1.5. New York Stock Exchange down 4. Gold up 60 cents. Silver up 2 pennies. Again, light sweet crude is down 84 cents. Let's go check in on light sweet crude. Let's go see what it is doing out here. Let's take a look at its daily chart here. First, light sweet crude may have formed the C point of an A to B equals CD to the downside out here. Price had gone from a high out here in the trading session of, looks like, let's see, June 23rd. You were up at 106.46. You were up at 106.51. That was high on June 25th. That would be the A point if this is forming an A to B equals CD to the downside. Your B point on this was the price move down into the, and it made, in essence, almost 100% move of a move back here on July 15th as price had gotten down into the set of swing points in the early part of May out there. That would be your B point. Your C point is this retracement right into what the TAS market profile signal box high out here. The actual inter-session high came in on July 22nd. That could be the C point of the A to B equals CD to the downside. That would say light sweet crude would trade down to a level of about 94.96. It'll find some support, may find some support at its most recent swing point, July 15th. So it needs to crack that low of 98.02. It's going to have to crack 99.06 as well, which is the market profile support level out there. If it breaks below those areas, what you ought to expect inside of light sweet crude is to move down to probably the 92.65 to 94.96 area. That's what's going on with that black liquid metal out there. Let's go take a look at see what we have moving in the marketplace out here. Moving to the upside, we've got Tyson Foods, TSN is the ticker symbol. Pilgrim's Pride purchasing the Mexican poultry business of Tyson Foods out there. Tyson Foods is the largest poultry, I believe it's number one poultry farm out there. Of course, most of the farms are operated by independent operators out there. Nonetheless, let's go take a look and see what Tyson Foods is doing. TSN is the ticker symbol. Gapping up on the news this morning. This thing had recently made, let me see where this thing had moved down into. Oops. Let me try to squeeze this just a little bit. Technical term. Yeah, so what Tyson's Food did, let me clean up the chart here, give you a little bit of a better view. So I'm going to remove some of the moving averages. We'll just kind of get this clean. We'll leave relative strength down at the bottom. We'll go ahead and leave the volume bars out here because really what I want to do is show you what Tyson's Food was doing back here as it was moving down. Now, it most certainly was moving down with some volume, some accelerated volume, June 9th as well as on June 10th. But what it was doing was it's pulling right back into a area where it had broken out. It broke out on January 31st with 12 million shares out there. So that's a pretty decent volume. If you're going to take a look at support lines, really you draw two of them in there. The first one would be at the bottom of that breakout. That's the January 31st low. That's at a price point of, 35.61. So that's we'll call that support one. Support two is really the top of that gap. That's the 34.61 level. That's the top of the January 30th. Notice how price just really came back into that breakout area. Now, this is a stock to be cautionary about. The reason that I say that, even though price pulled back into a area where it had broken out of, it had some pretty decent distribution. Had some pretty decent markdown, really, more so. On May the 5th out here, we saw some institutional selling as 11 million shares traded hands at trading session. And price is kind of moving back up into that area as we speak right now. We also saw some volume picking up on June 9th with 12 million shares to the downside out here. So at best case, I would have to say, in the case of Tyson Foods, is that it would go ahead and make its way back up to its reversal swing point out here on April the 1st. That's at about 44.24 out here. On a weekly basis, if I put this on a weekly chart, it probably doesn't look too bad. That is Tyson Foods out here. Yeah, see, yeah, actually, you got that volume bar. So it looks to me like where Tyson Foods will probably trade back to, and it'll give us a piece of information. It may be that high from April or March 31st. I would have to say that high from June 2nd, where it really began to break down. That's at a level of 43.63. It's just that volume to the downside out here on June 9th that is a little bit concerning. But the trend still remains intact. If you come back into the August 2012 timeframe for Tyson Foods, we'll come back at that low. You'll see that the trend really still intact out here, the nice rising trend out there. Whoops. Didn't mean to do that. So just a little bit of concern with regard to that volume. Stop that, would you? A little bit of concern with regard to that rise or that increased volume to the downside, both on the weekly and the daily out here. Also moving, let's see what we have moving here percentage-wise to the downside. So you got Zillow, but that's after the buyout of Trulia. So Zillow trading down about 4%. Horizon Pharmaceuticals, I don't think we looked at that one. HZNP, that's trading off 30% here this morning. I don't see the news behind it. That's not the one we looked at earlier, was it? No, we didn't look at. We looked at something else. So Horizon Pharmaceuticals taking off to the downside, taking out a swing point on a weekly basis. Let's come back and take a look at the daily charts. Now, this has a high volume high that has not been tested. So if volume today, that's on a weekly chart that we're looking at, 38 million shares on March the 17th. But let's put this on a daily chart. Let's see if it's high volume high on the daily chart. Yeah, most certainly is. High volume high. So had volume of 15 million shares on that trading session from March the 19th. Nonetheless, though, it is taking out a swing point today. That is from April 15th. That's 3.8 million shares on that day. The low is 1150 here at 963. Looks like this is going to trade back into its last sign of strength out here, which was on January 29th. Now, the 1-to-1 A to B equals CD to the downside for this equity, which is HZNP. Let's go see where the 1-to-1 A to B equals CD to the downside takes us to. Well, it's traded. It's gapped down into the 1-to-1 level here this morning. Whenever you do that, it says it wants lower price. So 865 is your 1-to-1.272. And at 865, it's going to take you right into the last time that it had broken out. That's other than the high volume high out here. That takes us back into the January 27, 2014 level. Let me just pull this back just a little bit more. If it does not hold that area where Horizon Pharmaceuticals will likely trade down into is this breakout from November 19th, where it will go ahead and also complete a 1-to-1.618 A to B equals CD. That's somewhere in the range of about 556 down to maybe about the 445-ish range out there. That is HZNP. Let's see, what else do we have moving here? Percentage-wise to the downside, you've got Jumei International Holdings, JMEI is the ticker symbol. Now, that is trading off about 9% this morning, down $2.90. Let's take a look at this equity, see what it is doing. Ticker symbol on this is JMEI. So it looks like this is a IPO. I'm not sure if this is a foreign company or not, but not a ton of, well, the volume about 1.5 million shares on a daily basis out here. So the IPO looks like this is from May 16, 2014. Not a ton of trading information here to really provide us with enough of an indication as to what it really is trying to do. So let's just skip over Jumei International Holdings. Let's go take a look at Amazon, though. That's got plenty of trading data. It's off. Give me a moment, Al. Welcome back, folks. Sorry about that little interruption out there. Let's take a look at Amazon. Right now, Amazon trading out at about $320 and a little bit of change here. So gapping down with big volume on Friday. 17 million shares to the downside out here. If we pull Amazon back, it's got a little high volume low that has been tested. This is back at the trading session here of April 28th. That is got a low out there of about the $288 level. Should we see a close below Friday's low out there? That price point, by the way, is at $314.76. Pretty good chance we'll see Amazon go test those lows out there. We've seen Amazon have a couple of really down volume trading sessions. The first one took place back here on January 31st, 16 million shares. So you saw to the downside. You saw some pretty decent institutional selling. That was followed up several weeks later, April 25th to be exact, 16 million shares to the downside. And now we have another day to the downside out here with 17 million shares. If we take a look at a weekly chart here for Amazon, let's put this in. We'll take a look at a long-term trend line out here. I think this will take us back into the 2008 time frame. That's a pretty decent time frame to go ahead and draw a trend line. If we take a look at Amazon and we go from that trend line low out here, and this has been my contention all along, that this is maybe where Amazon wants to actually travel to. You guys can do this at home as well. And I would say come back to the 2008 lows. Inside Amazon, that's at a price point of $34.68. And use that low. Use your next touch point area. Use the low from June 28th. That's at a price level of 106.01. That also happens to tag the July 19th low. And that's at a price level of 105.80. That sets up a really nice trend line out here. And it looks to me like Amazon is more likely set up to want to try to move down and test that area. If it breaks that, then you've got some pretty big trouble out here inside of Amazon, as it'll be breaking through a very long-term trend line to the downside. So that's what's going on out there. We've got the Dow's off 34 right now. S&P is down 5. The NASDAQ Composite off 10. Russell is down 3 points out here. Perhaps the most bearish chart out here with regard to the Dow is this one here. And this is one that maybe is sending the message to us. This is, what the heck happened here? Give me a moment to, there we go. Okay, now we've got it. Fix that. If you take a look at this chart here, the top of the chart is GE. The bottom of the chart is the Dow. And what this shows here, if you've listened to the show before, you've seen this chart before here. GE has a pretty decent win-loss record of being able to point the direction in the Dow out here. Now, not a top percentage holding inside of the Dow Jones Industrial, but it is a really good leading indicator as to what may take place out here. And GE, if you take a look back here in January 16th, to be specific, when it broke through its little rising trend line out here, you can see that the Dow took about 20 days before it broke through, and obviously the Dow had a pretty decent retracement back into lows here in February. GE broke through that trend line back again on June 25th. Price tried to get back up inside that trend. It couldn't do it. Well, on Friday, that trend line gave way inside of the Dow out here. So the question becomes, okay, what kind of retracement can one expect? Let's go take a look at the Dow. Let's go take a look at some retracement levels out here. Give me a moment. We'll pull up the Dow. I'll do it using my Ensign Windows software. So let me pull up the indexes. Give me a moment here to pull up the Dow. We'll take a look at its most recent swing points out here, see if we can find a convergence with regard to where the Dow may be headed to. And in this case here, as we take a look, let me just delete most everything off here. There we go. We'll just clean that up. So we take a look at, we took a look at a trend line here inside of Amazon. Let's take a look at first the trend line before we go to break. When we come back, we'll study the Dow just a bit more out here. A dead cat bounce, a 0.382 retracement off of that February low, 16,454. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow's off 54 points right now. S&P is down 6. NASDAQ down 14 points out there. When we began the show, we were taking a look at the A to B equals CD down pattern in the 120-minute chart for the Dow out here. Let's go back and check in on it, see what we've got going on here. As we take a look at it, we notice that the Price had stopped at the 1 to 1.618 A to B equals CD to the downside. That was earlier this morning, and that took place, well, actually it was last night at about 8 p.m. We can see now price moving down to the 1 to 2 A to B equals CD. The downside, that price projection 1963.50. The actual high we have seen thus far is 1963.75 out there. If it cracks 1963, the 0.618 retracement off of, which is a normal retracement off of its most recent low, which took place at 8 o'clock in the evening on July 17th. That's from the low of 1942.50 up to the high of 1985 out here. That took place 1985.75. Your 0.618 retracement level is 1959 out there. So at this stage, you'd have to assume that based on that little thrust, if we take a look at volume out here, just go down to a shorter time frame. If we take a look at what's going on the 10-minute chart out here, we'll see that we've had some pretty decent volume to the downside out here. In fact, the last 10-minute session, 940 to 950 out there, we saw a volume of about 73,000 contracts. So that would suggest to me out here that price wants to head a bit lower, probably go test out that 0.618 retracement level out there. That is the current message of the markets. Price is not overbought or oversold. Let me put up this chart out here. We'll take a look at it. Let me do this. Let me put this up here. Let me just get rid of the A to B equals CD on this. We've already taken a look at that. There we go. Okay. And right now, Clearly, the area that is acting as a resistance point. We got the black line, the thick black line up here. That's the 20-day exponential moving average. Right now, 1972. That's an area that is certainly acting as resistance. Closing above that would be somewhat bullish, but at this stage, that has held as a resistance level. Let's go check in on the VIX index out here. Let's go see what the VIX index is doing. It did manage to close above the 50-day exponential moving average on Friday, so moving higher again here this morning. We can see that it's priced out at 13.27. The 50-day exponential moving average on this is at 12.13. So as long as the VIX trades above the 50-day, that's where we start to see damage that is done inside of the markets. You can take a look at this chart here on my screen. You can see I've highlighted the yellow areas to identify when the VIX is above the 50-day exponential moving average, and down below is the S&P 500 and the damage that can be done there. Let's go check in on our favorite currency pair, the Euro Japanese yen. Let's go take a look at it. It's a daily chart out here. That is, got to move over to the left. Give me a moment here as we pull that up. The Euro Japanese yen, it's broken through on its daily chart. It's rising price channel out here. Once it broke through that level on the trading session of July 22nd, I should say, prices tried to get back inside there, and it's been rejected on two occasions, both on Friday, July 24th, as well as Thursday, July 24th, and Friday, July 25th out there. If I take a look at the 120-minute time frame out here, it's still maintaining to hold its low, and it still may have, how about that for language? It still may have an A to B equals C to the upside that it's actually trying to complete. Well, folks, it is Marvelous Monday. Thanks so much for joining us here at TFNN. If you're out to start your day, have a magical day, and I look forward to seeing you bright and early tomorrow morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.